Hey guys, welcome to a new video. In today's video, I would like to show you how do I use moving averages on a daily stocks market in a day trading. Many beginner traders use moving averages as a tool for their entry and exit from the trades, which I really understand because the moving averages are one of the most simplest indicator out there, which you can just activate to any platform. But trust me, the stocks market is not moving because of the moving averages. Your moving averages are just squiggly lines on your chart. So before we jump into real chart examples from the platform, I would like to introduce myself a little bit. My name is Robert. I'm an equity trader for the last 7 years. I would like to bring you as much as possible value from a day trading, especially if you are focusing on options and equity market. So as I mentioned at the beginning, I'm not really using moving averages for my entries or exit, maybe a little bit for a trade management once we establish a trend for a day. That we can discuss how to use moving averages for trade management purposes. However, the most important thing where I'm using the moving averages is to measure intraday extension from the open. That's a very helpful tool, and you will get an idea how extended we are opening to the upside, maybe to the downside, and where is your equilibrium area, because the chart's only going from extension back to equilibrium, from equilibrium to the extension, and that's the move which you as a day trader you can start catching up. So now let's get into real chart examples, and I'm going to explain it to you properly how I'm using the moving averages from intraday perspective. So I'm going to show you my real chart examples from a real account. First of all, which moving averages do I use? I use 8 and 21 moving average, exponential moving average. So the red line right here is 8 moving average. The blue line is 21 moving average, all right? It is EMA, exponential moving average, not a simple one. Do not ask me why 8 and 21. It's because my first mentor taught me like that and it works perfectly. You can also choose whatever time frame you are using. If you are using 2 minutes time frame, 5 minute time frame, 15 minutes time frame, it really doesn't matter. I use 8 and 21 moving average across all the time frames, all right? And it works perfectly, guys. So the first thing what I wanted you to understand, we have two types of corrections. So how the charts can get back into equilibrium area, so which is the moving average area. The first thing is we can get back into equilibrium area by price correction, and the second thing is we can get back into equilibrium area by time correction. Now I'm going to simply explain it to you what does it mean to be time correction and what it is price correction. So imagine you have a moving averages somewhere like here. It is 8 and 20 moving average, and now you are opening extended somewhere here, and if the price going sideways until we are going to catch up with the moving average equilibrium area, that basically means it's a time correction, okay? Because the chart is waiting and it's going into the sideways until it's going to meet with moving averages. The second scenario would be price correction. We are opening again extended somewhere here, and the price will get back to equilibrium area to catch up with the moving averages. So the price going actively against moving averages. All right, now let's have a look for a real chart examples. We are opening extended somewhere here on the MU chart. The moving averages are starting from the previous day close, somewhere around like 940, 935 price area, and the chart is opening around like a 990, 985. What does it mean? We are extended almost like 40, 45 points to the upside from intraday perspective. What do you want to do if we are extended so far? You don't really want to do anything. You want to be patient and wait until we get into moving averages. Why it is important to get into moving averages? Because again, the price on the market, every single stock is doing move from equilibrium area into the expansion, from expansion back to the equilibrium area, all right? And if we are opening somewhere extended to the upside or to the downside, it means we are already expanded. So you have to wait for a move to catch up with the moving averages. The question is there a trade? It is, definitely. It depends on your trade setup, but that's not the purpose of this video, maybe in the next video. So the first example, MU from 2 days ago, we are opening extended to the upside, and look what the price did. We went a little bit lower, pull back a little bit lower, and once we catch up with the moving averages, we start establishing the price and the buyer starts stepping in, all right? So the new volume comes in. We are sitting at the moving averages. We're trying to hold moving average for the first time, a little bit up move back to the VWAP, and then a little bit of the pullback, and we held the price again with the higher low. So what does it mean? The volume, the buyers are stepping in again, and we are able to go higher. And that's your move. That's your potential P&L for a day, because now you know we are no longer extended. We are sitting at the equilibrium area, and you are expecting to the price start moving away from equilibrium area. So that was the real chart example number one. The second one would be the Apple chart. Apple chart from yesterday, you can see a little bit of the time correction. Okay, so again, the price is opening somewhere around 318. Okay, the moving averages are sitting between 316, 315. Now the price immediately from the open starts shooting to the upside, so it means we were already extended like $2 or almost $3, and we start getting even higher, even more extended. And once we get into 320, 321 price target, which is this one, we start doing time correction. Okay, look at these three candles, 1, 2, 3. So it means the price went sideways in order to catch up with the moving averages. And once we catch up with the moving averages at this point, that was the signal. We no longer extended. We are able to go even higher, and that's your signal. That's your entry position as well. And again, once we get into extended period to the upside, now look what happened. We have to get back into equilibrium area. And again, once we are in equilibrium area, most likely what will follow? It will follow the continuation to the upside, okay? Because we are going from equilibrium into the expansion again. And that's your move again. That's what you have to wait for and sit on your hands until you will see some sort of signal which you are able to trade. I'm gonna go over one last example, and it is SPY index, market index from yesterday, and it is the same. It is the price correction. Okay, so we are opening extended somewhere around below 755. The moving averages are sitting a little bit above 752, so we are $3 extended to the upside. And look what happened. Immediately once we open, we shoot higher the first candle, and immediately the following three candles start getting back until we approach equilibrium area. Okay, and once we approach equilibrium area, moving averages, look what happened. The volume steps in, okay, the new buyer steps in, and we start shooting back to high of the day. So that's your signal, that's your trade. No longer extension, we are in equilibrium, expect move to the extension somewhere upside or downside. The same examples are happening to the upside extension, opening extension, and also to the downside opening extensions, all right? So you're just going to flip the chart. So if we are going to open to the downside, you are waiting for equilibrium area happen once the chart goes back to the upside to equilibrium area, okay? So it's the same example of extension to the upside, but you just flip the chart and now you are to the downside, okay? So you can use it to the both directions. So guys, hopefully you like this video. Please support my new channel, hit the like button, subscribe, and I'm gonna do the best to bring you the most valuable trading education content which I am possible to do it for you. Thank you very much for watching, and we'll stay tuned for the next video.